much what I want to say. I'm not doing much. I'm looking to react to the Fed, and so I'm, mainly a spectator instead of a speculator, unless I see some. This would have been the only trade I was interested in. So we'll see what happens there, and see if I get another opportunity. And the gold silver ratio is trying to correct, but still is an important top there in my view. So we'll see. But keep in mind the low that we had yesterday in gold, you don't want to see gold trade underneath it. And for sure not to close underneath it. So that's about all I have to cover today. Looks like crude making a new high here, diverging on the 4 hour, on the 2 hour. This may not be a bad turnaround Tuesday shot, risking a buck. So we're up at a lot of these targets. I know people are looking for 75, but why can't we have a pullback towards $70? How are you this morning, Blake? How's it going, buddy?
Hey, good morning, Dale.
Good morning. Good morning, partner. How are you?
Good. It's interesting. We talk about like the sterling. Yeah, the sterling broke down. Amanda's been shorting it since Europe, and I think we've had a lot of actually a lot of traders playing the bullish dollar move since Europe. And remember, I get up like you. I get up not too far off of current time, so. When I come into the chat room, I'm usually a lot of these trades have been going off all night because that's what people are doing. And
I've noticed a lot of the big reversals for years. I have changed for a little while, but a lot of the big reversals are happening during the European session.
They do, and that's the thing about the changeover is you have a situation where people start pulling profits off the table, and this one today is pretty specific because we have the FOMC tomorrow. And so what I did is I was long dollar Canadian overnight. I sold it at 87 this morning.
Nice.
Yeah, I mean, because this is the if you guys can see the dollar Canadian, we were looking at, well, here I'll show you on Forex Analytics so you guys can see what it looks like. Yesterday, looking for a bull flag pattern, right? And then today, as we broke higher, relative strength is divergent. So I decided, okay, let's just pull some profits up here. I sold mine at 87 or 88 this morning. So just pretty much where we're at right now. I think we will eventually continue to move higher. The problem is I think the market's getting a little aggressively long the dollar because they're feeding into the idea that we've been talking about for the last, since last week, that the dollar is going to bounce ahead of the Fed. And since we're already bouncing now, I think a lot of people are trying to get aggressively long the dollar. I don't necessarily think that that's the right trade. I personally would like to go into the Fed tomorrow flat dollars. I think trying to anticipate what the Fed's going to do at this point is a little riskier, and it's not something that I'm willing to do. I think this is a very we have a good deal of inflation coming through the market. I do feel that the Fed is probably correct in their transitory call. You look at these. Look at some of the commodities like lumber. By the way, lumber should probably bounce today. I'm thinking today is probably going to be the day that it bounces. But you have lumber coming off pretty aggressively, and you can see this is you were talking about copper,
Yeah,
Dale.
yeah,
Lumber's the same
yeah.
basic situation here.
Economically sensitive commodities.
It is,
Construction.
but it's come off really aggressively, and you can
Yeah.
see here that we're probably going to. By the way, I think the daily sentiment index was at 9 overnight. So that's
Wow.
really aggressive. That's very, very extreme bearish sentiment. So we should at least bounce, especially going into the Fed. Now, the reason why I point all this out is because I think we've seen a lot of these commodities come off. I think that commodities are trending higher overall. I don't think we can disagree with this, right?
Yeah.
But when you imagine like any market is like a rubber band, you guys always hear me talk about the rubber band theory. You get movements back and forth, away from the mean or the average. So anyway, the reason why I want to
be careful of slivers if you trade lumber.
Yeah, exactly. It's this is you're going to find this kind of funny, Dale. So you
splinters.
I was in northern Arizona this last weekend. For those of you that didn't know, my son was at soccer camp all week. It's usually the soccer camp is an overnight camp. You send your kids, they stay, the entire week up in the dorms, but because of COVID, they couldn't do that. So there's about 5 different families. We rented a big cabin, and I was like chaperoning, if you will, the last like few days of last weekend. And because we have a vehicle that's big enough that can haul, 7 people in up and around, and it's easier for us to do that. Anyway, long story short, the kids wanted to at night. They wanted to go out and play at the park of this town because there were some high school girls hanging out there, I guess. Anyway, my son jumps in the car and he has this sliver in his finger, Dale.
Yeah.
But it was a piece of wood. I mean, I'm not exaggerating. It was about 2 inches long, sticking out of his hand. And he's like, "Hey, Dad, you're gonna have to pull this thing out of my hand." He's like, coming to the car, like, hand holding his wrist, and it's got this big piece of wood hanging out of his hand. He got a bad sliver jumping over this piece of wood. And I looked at him. What's that?
See, you got to be careful.
Yeah, you got a sliver, and he looked away, and I just yanked it out of his hand.
And he went on his merry way.
Unfortunately, a piece of it broke off in his finger, so I had to take a knife and actually.
Oh my God, you're a surgeon too.
You've done that with. You have to, His friends were pretty impressed at how tough he was, though. I'll give him that much. But anyway, here we are at the 78% retracement breakout point. Lumber, but it's not just lumber. You were talking a little bit about copper. So you got copper that is coming off. Now there's and we've pulled off pretty aggressively. And as you pointed out, we are near the breakout point. I would be pretty hesitant about being short copper at this stage in the game. You've got probably some oversold relative strength. You're probably gonna get some sort of a bounce pretty soon. Actually, if we take these lows previous, we got a 618 coming up around 430 or so. One of the other things that's happening, and just staying in the commodity complex, take a look at crude oil. Crude oil's ripping. We're at another new trend high. We've met our minimum expectations of this triangle. We have if things really want to continue higher, we can really surge to complete the full triangle pattern. We could really continue on higher. If you notice, there's a divergent relative strength. This could, in my opinion, break higher, and then that would free us up to at least test this 161% extension. Now you got to think about that if you're short Canadian dollars, you're short like Norway, move higher in crude could really accelerate those moves higher or lower in their respective currencies. Let's take a look at the dollar index. The dollar index, I think, is pretty important here because we're probing these highs, and we might challenge that channel resistance. But personally, I think this is where we're going to be at come tomorrow. If you ask me, we're going to be right around here, about the middle. Well, actually, probably right around here, right in the middle of this channel. And as you guys, for those of you that listen to me every day, especially during the FACE webinars, you hear me say this all the time. Ahead of a key event, we tend to go mid-range. So in the dollar index, if the range is this is the channel. Ahead of the Fed, we're going to go mid-range, which is basically somewhere in this area. That's going to be the neutral zone, the neutral zone where the market doesn't want to be caught off sides, either or. I don't know what's going to happen with the Fed tomorrow. And I think there's a risk. I could argue either situation. I can argue that the Fed is going to, I can argue that they're going to start talking about tapering because, overall the economy continues to stabilize. We continue to make back jobs, maybe at a slower pace that we wanted. Inflation has ticked up, which will move the needle a little bit with economic activity. They probably want to curb some of the more aggressive price movements that have happened in the housing. So I could see the arguments for tapering. At the same time, I also can acknowledge the fact that the Fed has been more dovish than I had ever expected. And when Fed Chairman Powell has really blown the idea that Janet Yellen was the most dovish Fed head out there, I think that Fed Chairman Powell's got her beat now. It's hard to see him, change. And so as a result, maybe the Fed's not going to be hawkish. So I could argue either situation. And that's why I'm going to go into this meeting flat dollars. However, I see the risk in, you look at the dollar, I see the risk in a big recovery here. The market is extremely bearish, the dollar, and positioned for further dollar weakness. But at the same time, the dollar could really come under some pressure and stocks could see all-time highs once again if the Fed chairman's a little bit, just not as hawkish as the market wants. So I just think that the dollar is going to be right around these levels going into tomorrow. So anyway, and yeah, if you're playing the dollar reversal right now, you're late to the party. We've already been there, done that. You got to be careful being long dollars now. All right, we've been doing that since last week. So Stelios, good morning. How are you?
Good morning. I'm very well, thank you.
Good morning, Sel.
So what do you think about the Fed tomorrow?
Yeah, I was gonna say I agree with what you say. If you took a step back and you looked at the way things are in the global economy, in the US, the way inflation is ticking up quite a bit, the Fed should never have been still at these levels of, record levels of accommodative policy. They shouldn't. They should have already done something. And hey, if inflation does prove to be transitory, okay, so you've pared back a little bit of your asset purchases. You've hiked rates maybe to 0.5%, 1%. It's in the grand scheme of things, it's not it will have an effect, but it's not gonna derail the economy. Let's put it this way. What they're scared about, obviously, is equity markets, and it's obvious now. And they're making up all these excuses. Oh, it's transitory, it's this and that. Well, look, it's 3% and rising. You have to do something. But the question now is, like you said, Powell is a dove now. He started really. I was actually quite hopeful when he started, but now he's a dove as well. He's one of the biggest doves out there. So unfortunately,
crazy, isn't it?
I don't think he's going to do anything. Unfortunately, they should be doing something. And Steve has talked about this so many times, and I agree. They should be doing something, but they're so scared of upsetting the markets. I mean, so what if we correct 10, 15, 20% in equity? So what? It's healthy. It's nothing. We go back to, okay, ignore the COVID blip, the COVID crash, which we just went right back. We go back to levels of, what is it, like a couple of months ago, whatever it is.
Well, I mean, Stelios, I mean, it's just like, let's talk pre-COVID, right?
Yeah.
The highest pre-COVID, which the market was pretty excessive back then. I mean, you think about before even COVID hit. I mean, we're 25% higher than the highs. When I mean, I remember at the end of 2019. I remember just discussing with some of my neighbors, just because we were having this conversation just the other day, and I was talking to my neighbors, and ironically, this is how it all went. This is how it all happened. I was talking to the dad, and he, they have a good amount of family money that they inherited, and it was one of those types of situations. And back in the end of 2019, Dad and I were talking about how it's very excessive and the markets have gone really too far. I'm like, you know what? Go to more, cash heavy, and when the S&P gets back to 2,500, just get long again, and he did. And then COVID hit, and I remember during as we were down here at 2,500, he's like, should I be buying here? And I'm like, yeah, I mean, this is probably where you want to be buying. And he's long. But I mean, you think about this is
nice timing. Yeah.
But this was, I mean, he didn't obviously catch the bottom. He was like buying around these levels. But the fact of the matter is that it was excessive back then. And if we correct even from current prices, we correct 15, 20%. That is still at levels that we were at pre-COVID.
Yes.
And
which was already frothy, right? Yeah.
It was already frothy back then, with the excess liquidity that we've provided. So,
Yeah, I understand that the markets are pricing and realize that there's trillions being spent and printed. So, you will get inflation on the index just from that, everything else being the same. The economy, let's say it's not growing or is growing at a snail's pace, you're going to get inflation asset prices. And I guess that's why the markets just went ballistic after the COVID crash. But still, if you allow the indices to drop just a little bit, I don't see what the problem is. But anyway, maybe
so here's the other thing. And Dale, you know this from the amount of time that you've been in the markets, and I'm sure you would agree with this. The Fed understands that there's a few things that they can't let happen. They can't let the inflation genie out of the bottle. They really don't think that that's an issue. They've expressed that to us, the markets, that they feel that that inflationary pressures will subside. And Stelios, I don't know if you were here, but you've seen commodities like copper have come off, lumber's come off really aggressively. Yeah. But do you know one thing that they can't contain if it gets out? It's not the inflation genie out of the bottle. What's the one thing that they can't control?
The long end of the curve.
What's that?
The long end of the yield curve.
I don't want to talk mechanics. Let's talk.
Housing market.
They can't stop sentiment. If sentiment turns, if market sentiment turns, it feeds on itself. We've seen that time and time again, when the market and the Fed then has to step in, and that's when you get a taper tantrum. They understand that a taper tantrum is real. They realize that, post GFC, right? So they have to somehow manage sentiment because, if stocks correct, you guys know this as well as I do. If we correct 20%, Stelios, from current levels, what happens if we, if it accelerates past that, then sentiment really starts to sour. And then how do you turn that around if you're the Federal Reserve? If you have very little left in your arsenal to combat sentiment,
Yeah. Yeah.
So that I think sentiment is one of those things that you have to be really careful. I think the Fed has to be really careful. So they have to manage expectations. They have a really they have a very tough job going into tomorrow, I believe. So.
Yeah, they have to. They know they have to do something, but they would love to not do anything. That's a problem. So how do they keep telling us that, oh, it's not an issue and we shouldn't be worried? At some point, people are going to lose faith in them, or
but as of right now, I mean, you look at here's one last thing I should talk about. You have Bitcoin. Now, I know there's news about MicroStrategy and they're selling all this stock to buy more Bitcoin and all that crap. But the fact of the matter is you have, assets, digital assets, whether you call them real or not, doesn't really matter because they are higher and they are holding on to gains. And I'm going to say this, that as long as, cryptocurrencies continue to hold up, which, by the way, we are still below the 200-day moving average. If you're trading Bitcoin, I think if we get a probe at 42 and a half, 43,000, that's going to be, this is all a selling opportunity up here for those of you that, trade Bitcoin. But what I'm saying is, what I'm trying to point out is, while assets like Bitcoin are higher, this is telling you where all that excess capital is. One of the places it's leaking into is places like Bitcoin. And while these assets continue to stay elevated, I don't see any reason that stocks are going to really fall either.
And it's $1 trillion market now, right? So it's not to be scoffed at anymore.
Yeah, it's not. And as if you believe in it or don't believe in it, whatever your opinion is, look, it's a tradable asset, and it is. We get below 20,000 for any extended period of time. I think we might have to have a different conversation. But while we're above 20,000, I don't think there's any. We have to respect the fact that it is where it is. But that would be my opinion. So, Dale, I know you've got an interview.
Yeah, Nick is with us. Nick Santiago.
Great.
Nick Santiago. Very nice. Okay. That's In the Money Stocks.
Yeah.
Cool. Well,
been talking to Nick for years. He's very good.
Awesome. All right. Well, have a great interview, and I'm glad Nick could be here and appreciate him spending some time with our community. But before I let you take over, I just need to mention that if you guys have not visited our webinar sponsors, Pepperstone Securities, make sure you visit with them and open an account if you want to get Forex Analytics for free for a few months and be part of our community. If you're outside the US or Canada, open an account through this link. Matter of fact, Chris Weston, the head of research there at Pepperstone, and myself, we're filming some pretty cool debate type of stuff for you guys. The problem is I'm doing it at pretty late at night over here, because when you're dealing with Australia and we're on the exact opposite sides of the world, a little bit difficult, challenging filming that stuff. But we're doing some stuff with Pepperstone, which is really cool. But also, if you want to, if you're in the US or Canada and you want to get cash backs, rebates in your currency trading, make sure you visit Forest Park FX. You can talk to them directly right at the bottom of this page. That's at our Forex Analytics sponsored page. So thanks for visiting our sponsors. Because of them, they make this webinar free for you guys. All right, I'm going to pass it over to you guys.
Thank
Thanks,
you,
Dale.
Blake. Good
Thanks,
hunting
Dale.
today.
Thank you,
Stel,
guys.
thank you,
Thank you.
buddy.
Cheers,
Great
guys.
discussion. It'll be in my tagline. Okay, Nick, welcome back to Face, my trading warrior brother. Someone needs to stop sharing. Their Blake is off. Nick, can you hear me? Asked you to unmute. I'll ask you again. There you go.
Hey, Dale, how are you? Can you hear me okay?
Yeah, loud and clear, Nick. Thanks again for being with us. You know, I was saying that I've been interviewing you for years now.
It's
Probably
been a
good.
long, yeah, it's been a long, long time. I have to say, probably, I'm going to say close to 10 years.
Yeah, you know, going back to the FX Street days, and if you want to share your screen, it's that green button there, buddy. And I also want to acknowledge, and people really don't know how I remember because I didn't write it down, but I remember on your last interview, the trade you really had a lot of conviction about was long gold, and we've rallied a couple $100 since then. So excellent call, Nick.
No, thank you, thank you. And the funny thing about that gold play is that it did a retest after we spoke, and it went
Yeah.
back down at double bottom in March. And I'll actually pop that chart up there. But it turned out to be a beautiful W pattern. And that's one of the most bullish patterns you'll ever find. So hopefully everybody can see my screen right there.
Yeah, we got it.
And
Yeah.
it turned out to be a heck of a trade. I still have some gold plays still running. So I'm looking actually for more, believe it or not.
What about 1960 or so? One more
Yes.
push?
Yeah, I think right now when we look at gold futures, we're probably more in line to see a move up to around 1960 to 1980, and then
Okay.
obviously 2000 comes back into play. But that will probably require a little bit more work. But
Okay.
it's looking pretty good so far.
Yeah, you know, Nick, before we continue with the markets, it's been such a lot, you know, we've been talking for so long, and everyone learns a lot about themselves on the journey of becoming a trader, getting involved in the industry. Why don't you refresh my memory, you know, since I have old timers, about your genesis in the business and how it happened for you?
Well, I grew up in Brooklyn, New York, and I was always around the stock market some way or another. My dad worked in Lower Manhattan, where the stock market was. He worked at a restaurant. I used to busboy there as a little kid, and
Yeah.
I met all these Wall Streeters, and so I could say it was somewhat in my blood from the beginning. But my parents never wanted me to get into this business. But
Yeah, I'm in that club too. Go ahead.
my mother used to tell me, "Go get a union job like your brother," and
Oh yeah.
I was
Well,
just
my mom was more, you know, one white collar. Be a lawyer, Dale. Right.
okay,
Okay. Go ahead.
okay.
Yeah. All right.
And I just was fascinated by it. But when I was about 19 years old, believe it or not, I had a few dollars, and I had a little illness, and I went to the doctor, and the doctor saw me reading a Wall Street Journal and the Forbes magazine while I was in the waiting room. We started talking stocks. He gave me a tip. I bought the stock. I'll never forget it. I made 10 grand in a flash, and I was instantly hooked. 6 months
Yeah.
later, I gave back that 10,000 and more. So,
Okay.
I
Yeah.
had my fair share of rodeo markets, and now I just use technicals. That's all I care about, and that's where I am today.
All right, Nick. Great story. And really, yeah. Well, you know what? Back in the day, you and I were fortunate that we could rub elbows with floor traders and guys in the business. Now they're bowling alleys, and people have to scour the internet and really have great discernment as to what they absorb as credible and not. So you're definitely credible because you know you've been around. You and I are veterans, so now I'm interested in what you're thinking here. I remember last time you also said you didn't like equities. 2021 is years ending in one. Gann thought was not a positive year for stocks. Here we are halfway through the year, approaching it. Maybe we're getting close to some type of turn, or we're in the acceleration blow off stage. Where are you at on indexes?
Well, it could go either way at the moment. But if you recall, when I was on the program last time, I did talk about how the 1 year of a decade is always a turbulent year. You got to be careful. It's not a bullish year. This year it has been, but I'm just showing you the chart of the spiders here, and we can put up the S&P 500. But you'll see that we had a little late January dip, and then we had a
Yeah.
nice fall in February, and then in March was my big date. We really came down pretty sharply. I was looking for a March 24th sell-off. We had a beautiful reversal right here where my candlestick is, my cursor, and then the market reversed. And what happened there was we had the Archegos hedge fund blow up. So I have to think that somebody spilled a ton of liquidity into this marketplace in the near term to really keep that thing from really blowing up. I think the Archegos hedge fund blow up is bigger than we're being led and told. And I think that the powers that be, they spiked this thing. And now here we are at new all-time highs. But again, I tuned in a little bit to hear your last speaker. And, you know, we have a big important Fed meeting tomorrow. And really, it's not about the Fed raising rates anymore. It's about, will they cut their QE program, which is $125 billion a month.
Yeah, that's the first step, is to cut back on their buying. You know, you brought up that date in March. Was that because we were at the spring equinox, and now we're approaching the solstice?
That's
Do you
right.
look for change of directions like Gann did on change of seasons? So
That's
maybe,
correct.
so I bet you have a date for some inflection points around the solstice. What's that? Sometime next week?
Yeah, the solstice will occur right around the 21st,
Okay.
22nd. I think, you know, because of the beginning of the week, you also have a lot of movement going on with options expiration this week. This coming Friday, you got quadruple witching. So sometime next week, we'll get probably some more rebalancing going on earlier in the week. But I think, you know, as you get into the latter part of June, you got to be really careful, especially right after the equinox, which occurs basically around the 21st, June 21st every year. So,
Yeah.
And that's the summer solstice, excuse me.
Yeah.
But you always want to be careful around solstices and equinoxes. I tell everybody to go back, look at a chart, and look at all the turning points that you'll see in the winter solstice, the summer solstice, spring
Yeah.
equinox, fall equinox. It's really amazing when you look at it historically. And now the markets are up. They're up on really lackluster volume. If you take a look at the spiders,
Yeah, look
at
at
the
that.
volume yesterday. I mean, it's an absolute joke. So this
Yeah.
is what we call in the business a prop job. They're propping it up, they're staging it, they're getting all the suckers back in. And I want to show you something else, Dale, if I may.
Go ahead. Sure.
We're going to talk about just GameStop, okay?
Okay.
GameStop, you know, this is the ultimate sign of froth when you get these so-called meme stocks running. But look at this. I mean, this thing went up. At least there was volume here. Then it made a secondary run on lighter volume. Now look at this third stage run in the meme stocks here. I'm just going to use GameStop as an example. But look at the volume there. It's nothing. So that just tells you this is the last ditch effort. Froth is out here beyond belief. You know, a funny thing, Dale, we've had bear markets this year. People don't realize it. But if you look at the SPAC space, and I'm just going to punch that up, SPAK, I mean, I'm going to use the ETF. We don't have to pick individual names. But you're going to see 35 to 22. That's a bear market. Now you're getting a counter trend bounce right here, but the trend ultimately making lower highs. That's problematic. You had alternate energy space. We'll use the TAN, but you could use other stocks as well. 125 down to below 70. Now you're getting what we call an ABC, you know, zigzag up, counter trend move, you know, shortly.
So there's a lot of damage under the surface that doesn't show up in the averages.
That's right. When you open the hood of the Chevy, guess what? There's gold
through a
missing.
rod.
Yeah, there is. There's a big problem there. And people don't talk about it. But, you know, look at leaders like former leaders. Look at Tesla. Tesla was a $900 stock, went to $550. I think it's going to $450.
You know what, Nick? I've been talking 300. It's a big descending triangle from 900 to 550.
Absolutely.
Or even 750. We take out 550. It looks like we could, you know, trade.
Yeah, and I'll just show you why I say 400 is only because this is where the base was and it broke out. So
and there's a gap there. Yeah.
So you know, 4 to 450 is I think a shoe in. I don't even think it's not going to happen. I think it's just a matter of when it happens.
This was the original meme stock before there were meme stocks.
That's right. That's well said, Dale. That's 100% correct. But, you know, and then you get into these other memes, AMC, COS, all of these, and now you got Wendy's involved. I mean, if people don't see the writing on the wall, I don't know what is. And then, you know, Dale, you got these non-fungible tokens, NFTs. People
Oh
don't
yeah,
talk about
I don't understand them.
what is that? So you take it.
Yeah.
And here's the ultimate sign of froth. And I'm just giving the listeners, you know, a little preview. But people are now buying invisible art. Have you heard about that? You got to Google this. A person just bought it for $18,000 an invisible art sculpture, and then another one just sold for $10,000. Well, I got all the invisible art anybody wants to buy if they want to come get it. I mean, I could send it in a box with nothing in it. I mean, this is incredible. But this is the ultimate sign of froth. You also have Bitcoin, and I know you guys talked a little bit about Bitcoin. I do a podcast every morning, and I was saying this thing is as frothy as it could be when it was in the 60,000. But here's another bear market: 65 down to 30. Now you're getting a little counter trend balance up to 40. This is another bear market, and people just, you know, just continue on TV to just glamour the stock market like it's making new all-time highs and things are great. Meanwhile, investors that are in these individual marketplaces are getting absolutely wiped out.
Yeah, and you don't hear about that. I mean, SPACs were headlines for a while. Alternate energy space was sexy. Yeah, all of this stuff. Great points about the internals in the market that people aren't paying attention to. You have a view on yields, Nick? I mean, the 10-year was okay.
Yep, I do. So right now, what we have going on here, if you take a look, and here's a 10-year, and you can see that we put the highs in March, and I've been bullish yields for a long, long time. And right now, we're putting in what we call weekly and monthly chart consolidation. So here's yields. You're going to see right here, this is the 10-year. We're looking at the consolidation we're making. You don't go up in a straight line, Dale. You know how that goes. You go up, you consolidate, then you make another advance. I'd watch August, September, yields will explode.
Okay, what kind of where to 2.5 to 3?
2.5 to 2 3/4. When you look more along at a monthly chart, you'll see that bullish pattern being formed.
Yeah.
And then you're going to go to 2.5 first, then you go to 200 MA, then ultimately 3%. And then the same goes for the 30-year treasury. Same exact pattern is in there. So yields are headed higher on the 10 and 30-year.
Yeah, I'm hearing some people saying 10-year could pull back to about 130 before that happens.
I wouldn't rule that out. I think that's a possibility. That's fair, because when you just look at, let me get the daily chart up over here, but when you just look at a natural retrace, and we'll just throw that in there, because everybody should be using and looking at retraces all the time. Just a natural retrace to the 382 takes you to 130.
Yeah. And that's a shallow retrace after a tripling of rates.
That's right. It's a shallow retrace. So what's a good level? I like that level a lot myself. And, you know, that's where it brings you. So I love yields to go higher, but I don't think they're headed up right now. I think we're going to have to wait a little while. Probably my date for yields going up is probably August.
Okay. Like that, anything on the linchpin of everything, the dollar? You have a lot of dollar bears out there, Nick, and we've staged a little bit of a recovery. My take, I don't know if you agree, is I think we have to take out the January low of 89.20 in Dixie, and you could use any currency if you want for a proxy, but any view on the dollar in here?
Yeah, I'll pull up the continuous contract, but I like the dollar here for one reason. I think if the market the overall stock market starts to falter, the dollar goes higher. And I think the dollar now makes a run. I think the last time I was on your show, I was bullish as well. And we had a nice move. And then we came back down. I wasn't looking for a blast off. I think I was looking for 95. We got to 93.50. Yeah. And we came back down. Now we're doing that double bottom test. If we fail here, we're probably going to go test 88.5 or so, I would say.
Yeah, that's what I'm looking for.
Yeah, and if the market starts to come in, this will blast off probably to around 94. 94 is a big resistance point for the dollar index. The Dixie will stall out there. And then if you make a base, it can go Obviously, a lot higher, probably going to 97 or 99. But right now, the dollar's still a wait and see event. You know, the central bankers or the puppet masters, they run this, they run the show right now. And again, you know, with unprecedented money printing going on, it's hard for the dollar to get any kind of momentum to the upside.
Okay, and I would say the move that probably surprised most traders was the resilience and the strength in the energy sector. You know, because everyone was freaked out after it went negative, and every rally was going to be a rally to short. I know I've tried it a few times. What are you thinking here? And I think oil shares were one of the best performers of this quarter.
Oil has been on fire, but believe it or not, Dale, I just got short crude now
Okay,
for the first time in a long time. And I'll show you why. If you take a look at, there's a daily chart I have up right now. You
right,
see crude
right.
trading at 71 and change. But if you look at the monthly, look what it did. It's right up into the 200 month moving average. And look what it went into, what we call a sideways base failure. The best moves come from failed moves. This was a bullish base that were reversed. So you got a lot of money right here that is looking to get back break even. And I think they're going to pull crude back. I don't think the crude run is over, but I think crude right now is due for a pullback. And
Okay,
a decent one. I think we
okay,
get pulled back down to low 60s.
okay. Anything else on your radar that you want to talk about today, Nick?
Well, obviously, we have the all-important Fed meeting. We have
Yeah.
quadruple witching options expiration on Friday. I think this is a week where you're going to get a lot of neutrality. You'll get a lot of whipsaw in the popular names. Stocks that have been up in the stratosphere, they're vulnerable for pullbacks. This
Right.
week, stocks that are down a lot, they're susceptible to some bounces just due to options X. Once we get past this options X, we get back to real trading, and I think everybody should be on guard once you get into that spring, into that summer solstice.
Yeah, because there, you know, if you have anything to say, an adjective to use in the market right now would be complacency. You have a view on the VIX? Do we have one more low left in the VIX before we come out of here, and we'll
I
wrap it?
Yep, I do believe we have one more low left in the VIX. You're going to see that the VIX has really fallen off a cliff. Last couple of days, it's upticked a little bit, but I think the VIX got one more drop to go. I'm working on the price level now. My members are just beating my door down about the VIX, but we will be looking to get into it. But I do think you make one more daily chart low, and then it's
Yeah.
time to own the VIX one more times this year.
Okay, Nick, you want to show In the Money Stock website and some of the services that you offer and how people
Absolutely.
could follow you?
Absolutely. So we have a live trading room each and every day. Come over. We start that up around 9:15 in the morning. We go till 4 o'clock. We day trade all day. Your best day trading time is in the morning. Then we have my services here, Bullseye Trading, Bullseye Options. We're having a dynamite year overall.
Are you guys going back to the office, or are most of you guys still, you know, remotely working?
We're all still remotely now because
Yeah.
now we've gotten so used to it.
Yeah, yeah. Which
You know,
bathrobe should I wear today?
That's right. You know, trading in your underwear has become popular.
Yeah, it's comfortable. Yeah, all right.
It really is. But you know, come on over, check it out, and then we have a ton of free stuff right here on our free trading blog. Come read it, and you can also follow us at Twitter. Mine's at Nick Santiago01, and again, we talk about different equities each and every day. So come on over, check it out. It's all there for you. Lots and lots of information on the site.
Thank you, my trading warrior brother.
Dale, it's great to be with you again, and hopefully we'll talk soon, buddy. Thank you.
We will. I'll contact you you're in the rotation now, bro. All right.
Thank you very much.
And really have a great summer, Nick. And you know, I hope pips rain down on you and all the people you work with.
Thank you, my friend. The same to you. God bless, and we'll talk soon.
All right. That's a wrap, everyone, for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. Don't just count your boards of lumber or gold coins. You know, think of something you could be grateful for, and it's going to be a better way for you to live. So that's a wrap, everyone. Good hunting the rest of the day. Thank you again, Nick Santiago, and we'll see everyone tomorrow for the Fed. Adios.